Today, we're gonna go over 5 misconceptions about home mortgages that you should know that could potentially put you in a financial burden. Number 1 is the equity illusion. This is the misconception that homeowners have immediate and unrestricted access to the equity built up in their homes. Now, follow me on this. Yes, home equity can be a valuable asset. However, if this is the only cash you have access to, if you were in times of need, it could be challenging, and I would say it could be dangerous, right? Because a home equity line of credit, aka a HELOC, is still something you have to get an approval for. And there have been times in history, and I could think of 2 in my lifetime. Number 1, in 2008, the financial crisis. And in COVID-19, these were times where HELOCs were either frozen or reduced, right? So the ability for you to access those funds were no longer there. Now, follow me on this. Yes, home equity can be a valuable asset. However, it could also be dangerous if it's the only money that you have access to that you could access in times of need, because there are times in history, and I can think of 2, 2008 and the pandemic, where HELOCs and home equity lines of credit weren't accessible, right? You still have to get approved. And in those 2 instances, based on what was happening in the economy, it really wasn't even possible for you to access that equity. Number 2, limited liquidity. Gaining access to home equity often requires approval from lenders. Accessing funds through refinancing or a HELOC can also take time, and changes in personal credit scores can affect the access to HELOCs. Limited liquidity regardless of equity levels. In the past, if you used a HELOC to buy income producing assets, you put yourself at risk of 2 things: the bank or the lender calling back the loan, and interest rate fluctuation. What if there was a way where you could still invest in income producing assets but introduce guarantees and more predictability to your strategy? If you stay with us till the end, I have a free gift for you that talks a little bit about that. Number 3, hidden costs. Things like private mortgage insurance, PMI, property taxes, and maintenance and repairs that can all add up. Now, although homeownership is such a huge milestone financially, there are things that come with that responsibility that if you've never been a homeowner before, can come to you as a surprise. So if you initially bought the home and didn't put at least 20% down, PMI is something that is included in your annual cost that, by the way, does not cover you, but insures your lender, in this case, the bank, and it doesn't contribute to your equity. Property taxes, that varies by state, but could also just be a burden. Now, maintenance and repairs, if you need a new roof, if you need new windows, you name it, you are responsible for that, which is a lot different if you were renting. Number 4, owning is better than renting. And remember, we're talking about common misconceptions about home mortgages and how it could bring financial burden. So renting has flexibility. Renting can offer financial and lifestyle flexibility for those who travel frequently or prioritize investing in diverse portfolios. It's also personal circumstances, so not everyone benefits from home ownership. For many, renting makes sense financially. Accumulation versus appreciation. So the assumption that homes will always appreciate can be misleading. So not all markets offer significant value growth. And also investment diversity. So home ownership is only one form of investing. Diversifying with stocks, retirement accounts, and other asset classes can often yield comparable or better financial security. So I think what we're trying to talk about is that it is a case-by-case basis. To have a blanket statement saying owning is always better than renting is not always the case. It depends on you. It depends on your finances, on your goals, on your lifestyle. So these are just things for you to consider when making this decision. And number 5 is profitability. A misconception is that home ownership is always profitable. But let's take a look at this. Opportunity cost. Money tied up in a home equity can potentially yield higher returns if invested elsewhere with higher liquidity. Market volatility. Real estate values are subject to market fluctuations, and not all areas appreciate at expected rates. Illiquid investment. Unlike stocks or bonds, selling a home to realize a profit is a complex and time-consuming process. Yes, it can be. And transaction costs. Selling a home involves agent fees, closing costs, and taxes, which can undermine realized profits. So again, homeownership can be an amazing goal to have. So what we want to highlight is that if you're thinking about getting into real estate, if that is a goal of yours, you want to get clear on what the real outcome is. Is it your dream home, or is it an investment property? Those are two different mindsets. When it comes to an investment property, you're going to think of, is it going to be a short-term rental, a long-term rental? Not all areas allow short-term rental, so you want to make sure that it's going to be profitable, net of expenses. When it comes to your dream home, you want to accept that that's more of a liability than an asset. Profitability there won't be the main goal. Now, we just went over 5 home mortgage traps that you should know about, and thank you so much for staying with us. Stay tuned for the next video, and don't forget to like, share, subscribe. And for you specifically today for staying with us, please click the link in the description and get access to our free crash course that talks about all things financial planning so that you could learn how to supercharge your wealth and create financial freedom.